Good morning, everyone. Welcome to the Modern Market, where every day we discuss all the things to do with the crypto market, the NFT market, and any other market that affects our crypto assets. Loaded up for discussion today, we have the majors dipping as the Iran-Israel conflict heats up. Legendary is going to be talking about that in a little bit, plus some other interesting regulation amendments or changes that might be taking place in the US banking system, which I think is pretty significant. We'll be talking about the US Senate passing the stablecoin genius bill. Excited about that. And finally, public company Eyenovia raises 50 mil to buy Hype as part of a Hype treasury strategy. As usual, we'll discuss everything else going on in the market to get you up to speed with all the other things that you need to know. But before we get there, I have Bread and Legendary in the co-host seats with me today. And before we get into it, just a reminder that nothing that we say here is financial advice. The market is very, very risky. You already know that. We know that too. Please proceed with caution and exercise your own judgment at all times. With that out of the way, Legendary, it's Wednesday. It's the 18th of June. How are you doing? How are you feeling?
GM, doing quite well. It's been an exciting morning. I did my 4th session of my interval hypoxia training and had my best session so far, which means I'm now going with longer intervals of less oxygen saturated air. That's 6 minutes, 3 minutes with oxygen rich air. And my body's adapting to that. And that's pretty cool to see the progress over the last 4 weeks, because everything is tracked. I have charts to look at. That is good. That was exciting. And then I used this momentum to buy, it's absolutely unrelated. I don't know why I'm connecting this, but this is what I did this morning, to buy a couple more Bad Bunnz and now push my holdings to 1% of the entire Bad Bunnz supply, which is, I think, the most I've ever had in a single NFT collection, which is weird. It's a weird feeling to hold 1% of something. That's not
what gave you the confidence? Was it the team? Because you talked to them, right?
I did talk to them, yeah. And that is definitely what gave me a lot of confidence. Plus, what can I say here? The fact that they managed to get so much traction on X without going with any of the traditional marketing agencies, or without going with any marketing agency at all. No KOL deals, nothing in the background, just purely off organic momentum. And just seeing what Hypeus did on Hyperliquid. And that's not to say that this will exactly mirror that. It's just my bet that this could happen on Mega. But that and talking to the team and seeing this organic momentum gave me the confidence to go significantly harder in this collection and post definitely more about that than about other NFTs on the timeline.
Yeah, I mean, I'm no inside information. I'm not part of the team. It could be, and who knows what the fuck the market does with them. I told myself I wouldn't get into I'm trying to reduce my NFT exposure this cycle. I have not removed my large bag of Cleanosaurs from, and they're doing well. So it's if we're doing this thing that we've been preaching for a while, where we do a holistic view of all of our portfolio and saying how much is in NFTs, how much is in Hype, how much is in Ethereum, how much is in whatever, should you shift the percentage? It's hard. I have FOMO, but I can't do it. I can't.
And you can't.
I already have a lot of NFTs. I have too many JPEGs. Yeah, and maybe that's part of it, right? This is the same thing I did with Ethereum and Hype for a while, right? I looked at the two things and I was like, guys, I've been in Ethereum for so long, and it's finally gonna do the thing. And then eventually I just pulled the trigger, and then now we have public companies purchasing Hype for 50 mil, and I'm along for the ride. And my kill myself insurance is there. Actually, I need to do that for Robinhood too. I have a lot of coin, and I have no hood exposure, and I need to finally split that up a little bit, just to get the edge off. Same thing we do with Hype, right? Buy a little bit, get in position, buy 10%,
yes,
do the release valve thing. I think I need to maybe do some of that somewhere.
I like the idea of going with Rich.
No, I feel that. I feel that line of thought. And the stock set is confusing me, because I'm used to buying stocks as a long-term investment and have my S&P 500 exposure. Not with Hood, but in this case, in my case, with Circle. So I did buy a good amount of Circle, and just checking my brokerage account for 1 second.
Yeah, it was like 160 yesterday.
Yeah, I'm up
What I
60,
saw.
up 57% on that. So on a stock within like 10 days or so, which is an outrageous performance for stocks. And I'm not sure what to
Well, you're
do
in
here.
crypto, bro. 57%, and what
Yeah,
is that? That's
exactly.
it's a pump for ants.
But and I'm wondering if this is what's happening more and more. If we get like more crypto traders flowing into like quote unquote crypto native stocks, if these will behave more and more like meme coins. We've seen SBIT, we talked about that as well. So I'm not sure what to do here. Do I keep my Circle bags? Do I just sell them? I am a bit clueless because I'm not used to stocks doing the things that my crypto bags do, which is go up a lot.
I think, yeah, go ahead.
No, you go first.
I think incorrect assumption to assume that those are crypto traders causing that kind of price action. Like, it's a crypto stock, but dude, TradFi is just as degenerate as we are. Like, dude,
That's a good point.
facts. Dude, options and Robinhood and like I remember vividly, because I was the same thing. I come up from the school of like the intelligent investor, right? You're like, okay, buy the index funds, like do the long-term thing, like Warren Buffett, bro. Like buy all that shit. I had it. I was like, had a good job. So I had a shit ton of index funds. And then I started going to Wall Street Bets. And I was like, okay, you know what? Maybe I'll eat a little bit into Purple, which is a mattress company. Maybe I'll start getting a little crazy for a little bit. And then one day I yeeted everything into GME stock, like just yeeted it. And like, yeah, so it's not crypto people. I think it's broadly more retail focused. Like it's all becoming more accessible. Therefore, you're going to introduce a little more volatility because frankly, the education level is down. Like less, or I wouldn't say education level is down. They lean less on traditional metrics for valuations. Same reason Tesla has gone bananas over the last decade. It's because the people valuing it don't go strictly on DCA or DCF. They go, bro, Elon's going to shoot a rocket into space, and no one does that. I'm buying this car. Like that doesn't make a whole lot of sense, but people are like, it's a tech company. This thing's going higher. And you get enough people that can do that with one click of their phone. Like, you start moving markets and you start getting the rage watchers of the traditional investors that go, that doesn't make any sense. Look, if you do the DCF calculations, that's 100x multiples. They'll never be able to reach that. Everyone else goes, I don't care. I'm buying this thing.
Yeah. You can't forget like the PE ratios and all those metrics that you traditionally used to look at with those.
They're meme coins.
Yeah.
The only thing you can't forget though, so I think the answer to your question, Ledge, ultimately is the same as the answer to the question as it would be in crypto, which is, okay, the price has gone wherever it's gone. What is the schedule? What is the vesting schedule? Like, I think, and this is the thing that you would need to go and look at to check before you research before you take any action. Just like in crypto, you would need to know when all the investors are vesting, when their cliff finishes, when they're allowed to start selling, because that's when they dump on top of you. There has been none of that right now, right? And I'm pretty sure that when I read about this and I was researching Circle at the beginning, it was like the opposite of Coinbase. So apparently when Coinbase came out, people were allowed to sell like straight away. Circle is not the case. Like they have not been able to sell, that they're locked up. I can't remember how long it is. I'm going to make two numbers up that are in my head, which I think it could be. It's either 6 weeks or 6 months. I can't remember. But that to me is the answer to the question. Like the people who hold Circle equity, who are in the company, cannot wait to dump this on you. Like 110%.
Yeah.
Like
So
think
that's why
about
they
it.
did it.
Of course, like they cannot wait, right? They absolutely cannot wait. They're going to dump as much as they can because they've just made God knows how much money.
Yeah, 5x.
As soon as they are able to, as soon as you answer that question, when the lockup closes, is when you know when to sell. I think it's especially, sometimes in crypto, they're like, oh, it's a bullish unlock. They're not really going to sell. They are 100% going to sell this on you. This is the liquidity event. And fair enough that you would do the exact same thing because this is the liquidity event. There's been none of that as far as I can tell at the moment. So that's my take.
I just needed to roll into coin appreciation so that I can like that. That's the thing that's scaring me right now. It's like I want to do the hood diversification. I will undoubtedly sell out of a little bit of coin to do that. But I'm like, I've been holding on to this fucking thing for 2 years now. And it's gonna be like, bro, like if people actually do the math and understand that, like, okay, Circle, they're valuing it at 50%, 60% of coin right now. But maybe the market does not realize that 60% of all revenue from coin, like everything that they're trying to capture there, actually flows to Coinbase, like the Bitcoin stock. I go, well, shit, brother. Like, if you think this is worth this, you should look at this other thing. But is that like, I don't want to be the one coping and watching this thing like everyone else, where it's like, you guys are wrong. You guys don't realize that this is the thing that's valuable, and then like it never actually runs.
Yeah.
180 days lockup, so December 2nd.
There you go.
December 2nd. So that might be in line with, shout out to Nate in the comments, 6 months lockups for IPOs. So maybe that's the 6 months.
Is that static?
I don't know if it's guaranteed across the board, or maybe there's a little bit of like, depending on the listing, you can change. But that's what Nate said. Appreciate you, Nate. And thanks to eBrink. I've been thinking this a while as well. It's just we're running back the low float, high FD meta, but just on the stock market. It's kind of what's happened here, right? There's not a lot of stuff out there. I think we're just bidding it up.
Yep. I like Marco Polo also in the X comments. If anyone knows how to find exit liquidity, it's TradFi.
Yeah. Interesting. Okay. Yeah. Good stuff. And I saw a good take as well. Just about TradFi. It's like, in the end, the money is there to bid this stuff. Like, if you think the stuff can go high here, it shows like there's crazy demand, I think, at the moment for this kind of stuff. But interesting.
Just
Good.
One thing before we get into price action. I think that's one of the most wholesome things of doing the modern market with y'all in the entire community, that we discuss all kinds of topics, and by no means are we an experts on all of these things. And that we have this live research going on. We have the comments on X, on YouTube, like providing us with additional information and becoming part of our like live research on certain things. And I feel like that's so wholesome whenever that happens.
It's the hive mind, baby.
Yes.
Hive mind in action. That's it. 1 hour every day, enter the hive mind, go out and make money the rest of the day. There we go.
I just wish I could provide value to them. Like, they're out here giving us like actual like smart things, and then I'm just like, oh, you want to know about some scaling, bro? I'll tell you which blockchain's faster.
Yeah, that's
and
what
digital bunnies. Yay.
Yeah.
As long as the bunnies go up. As long as the buns go up. Okay, let's get into the stuff to get everyone up to speed with everything else that is happening in the market today. As usual, let's start with the price action of the majors. Unfortunately, not a great day. Bitcoin is down 1% to 104K. ETH is down almost 2% to it's just under 2.5, but I'm going to say 2.4 because it says 2.4. And it should be higher, and I'm annoyed, so I'm going to say 2.4. ETH needs to do better. BNB down percent to 642. Solana's down 3% to 145. And our favorite alt majors, Hyperliquid, down 3%. Oh, dipped beneath 40 this morning, so down to 39. While Sui is dipping much harder, down 6% to $2.70.
And Bitcoin Cash flipped Sui.
It did, and just as a slightly kind of other interesting metric, on the week, Sui's down 21% now, which is clear underperformance versus the others. Hype's down 7% on the week. Even Sol's down 10% on the week. ETH is down 10% on the week. So he's like aggressively underperforming at the moment as things stand. Okay, getting into the meme coin side, nothing much better to report, to be perfectly honest with you. We have Doge down a couple of percent, Pepe's down 3, Trump's down 3, SPX is down 4, Bitcoin is down 5, Bonk's down 4, WIF's down 5. You can kind of see the pattern here. Pengu is down 6.
No green. Where the fuck is our green? Not even a one overperforming like consolidation to some value like SPX or something.
Nope.
There you go.
Not today.
Nope. Useless coin. 25% up. There we go, guys.
Yep. There's our green performer.
Right. So we mentioned useless yesterday as well. The useless coin is the chosen coin of Bonk Guy right now. Notable for running multiple coins up to multi-million-dollar positions. I think with leverage, useless coin is the chosen coin at the moment, and it seems to be bloody working again. I don't know if he ever sells any of this stuff though, so I don't know when he takes profits. So yeah, that is the outperformer. Maybe that's the bandwagon to jump on now. I wouldn't be keen to do it at this price, but there you go. Okay, getting into the headlines themselves. We have, let me find the headlines. My computer is being a bit slow. Les, you want to just start off with the headlines and I'll take over from the roundup?
First headline, majors are dipping, but did rebound a bit as the Iran-Israel conflict is heating up. So BTC did go as low as 103K, but got bought back up to 105K. Second piece of news, which we're going to get into, is the US Senate passing the stablecoin Genius bill. Personally think this is a very, very significant news. And then continuing on the trend of treasury companies, we have the public company Eyenovia raising $50 million to buy Hype as part of their Hype treasury strategy.
Like it.
And getting
on the
into
NFT side?
getting into the NFT side of things, you pointed out in the snapshot, the most noteworthy thing is, God, how do pronounce this guy? The Gristle Buddies mint, which did run from 0.069 ETH to a 0.4 ETH floor. Did a bit more than 100 ETH volume when Tyler posted that yesterday. Let's see where it's currently. It actually went up even higher. It's at 0.52 ETH now, with a total volume of 152 ETH in the last 24 hours. So that is the JPEG runner of the day. Apart from that, nothing to report on the NFT majors.
Not great on the PFP meter, I would say. Like the numbers are looking good here. Same thing that happened with like the Pokemon thing that ran for a little bit. I don't know if you guys caught that. That's probably a week or two ago. There's like these geometric Pokemon OpenSea, which did really well. Neither were PFP'd. So if that is a thing that is your metric for sustainability or like longevity, I have yet to see any of these on my timeline in the form of a profile picture.
Correct. And building on that, when people legit continue to ask me in interviews, in other conversations, people are obsessed with NFTs and like when they're going to come back. They're not gone. Like these art pieces collections are selling and doing like huge runs and then maintaining a floor. Tyler Hobbs, the only other one to add ledge, which is also in a snapshot, Day Gardens collection by Tyler Hobbs sold out yesterday. Sold out 325 ETH worth of art, like fine digital art. There was a selection of physicals plus digitals plus some digital only. I think the physical and digital sold for 8 ETH each, and then the digital was 5 ETH. Like there is demand for top class digital art still. In addition, Beeple sold Bull Run for 11 ETH, and CryptoPunks, still going. So if you're watching on screen,
I like these.
Legendary's found the Day Gardens collection. That's kind of cool, right?
Yeah,
I like these.
4.35 ETH floor at the moment, with the top offer being at 3 ETH. Less volume than the, what were the other things?
Grizzle buddies.
Grizzle buddies. I think what happened here is the classic thing where people tried to buy it at 5 ETH and flip it, and now they're listing it beneath the floor, which is, or they're listing it for less than they bought it, which is just classic NFT flipper behavior.
Did you collect any of these, B?
No, I didn't. I didn't go for this. Although if I did, I would definitely have gone for the physical. I'm on like a physical thing at the moment. I like digitals paired with physicals at the moment. That's one of my
Last time we talked about your physical art collection, I think you're in the process of framing a couple pieces.
I got the 2 Jack Butcher checks. I shared a video of that process. That's kind of fun. I've got those. What's it called? Yeah, I got it framed. Got the glass put on. Nice. You got learning about that whole process. Kind of fun. You got to make sure you got the right glass. Make sure you get the right effect for the right type of piece. And then I've got a couple more Jack Butcher pieces in transit from the one he did in Paris, which is really, really cool. It's kind of a more photography style, night and black and white. When is
so
in actual transit or in tax-free haven transit?
I'm not disclosing where it's going. It's on the move. It's on the move.
Are they actual physical prints of the thing, or are they digital display that reflects like the NFT?
No. So the way that I think the art stuff is going to go, and this is how Jack Butcher's been doing it anyway, and maybe other people will do it, is that there's a digital NFT, but the NFT is not animated anyway, which means that there can be a physical representation of that, which is not a million miles off just what the digital looks like. So I think the digital ends up being kind of a proof of ownership, and the physical is, is the physical. Yeah,
I feel like there'd be a creative way for you to be able to like scan something on it, or like show like in the corner a way that like this goes back to the specific NFT, which is in my wallet or my vault, which is like showing the combination too. Because like, I mean, yeah, fuck, I'll print off the thing and I'll right click save that bitch, right? Without the NFT, loses some oomph, but that is only like a cloud thing for people who understand even the NFT component of it.
I think interestingly, I think the value definitely sits in both. So like I remember speaking with Jaleel, who's like the developer with Jack at Visualize Value, and we were talking about how like people separated the physical checks from the NFT. Like some people got the physical and then sold the NFT for less, because you can still sell the NFT for less.
Yeah, of course.
But I think as a collector, it's definitely not the objective. Like you're doing something wrong there. That's like a violation. You're free to do that, but I don't know. I feel like you're losing the value. You're separating the two.
I like the Pudgy's approach to that. Right? Didn't they have like with the Lil, you could scan it, and if you scan it, you actually transfer ownership of the NFT to you. So possession of the physical is what gives you possession of the digital.
Maybe.
I believe that's how they did it, and I think that is the appropriate approach.
Interesting. Yeah, I think there's more cool things to be done with the physical side, but the main thing being like the art market for the top stuff is absolutely there. Of course it is, because the art market is always going to be there. So, and some of that stuff will just be digital now. So always keeping an eye on that market. I remember just recently had those masks of Lucy by Sam Spratt, which went crazy, 3x. I think we bought those for around 6K, went up to as high as 18. I'm still holding one of those. I think I'll still hold unless I need to buy more hype at some point. I don't know. Let's get into the rest of the roundup to get up to speed with all of the rest. We've got Treasury Secretary Scott Bessent projecting stablecoins to grow to 3.7 trillion market cap by the end of the decade. They're really they're enjoying stablecoins. They're enjoying stablecoins. They're enjoying its growth because they're just looking at that. That's a great opportunity to dump.
And the number's going up. It was 3 trillion from someone. I think it was the government, like official statement or something, but someone said 3 trillion as an estimated market cap for stablecoins. Now we're at 3.7. You need Kathy Woods to come in over the top and say like 50 trillion.
Well, this is I said this on the show like 2 weeks ago. My really specific thought here is, of course, they want that number to be as high as possible because no one wants, the demand for US Treasuries is going down. I think, this is my prediction, that there's going to be something to suggest that the stablecoin issuers are going to have to hold a certain proportion of certain types of treasuries, the ones that are declining in demand. And that will not be a fun thing. But of course, they want that number to go as high as possible because it means they can sneak in more treasuries. That's what I'm thinking.
Maybe it's the housing market again. Remember, that was the same shit. Like, oh, you bundle all these motherfuckers together and like, we're just going to stuff in a few of these lower rated loans at the bottom of that. And don't worry about it, bro. All of it will go up.
Exactly. Look, I'm going to come to Funk in a sec, although we're going to get into the stablecoin stuff in a bit more detail in a bit, Funk. So I don't know if you want to wait or you wanted to come in with a quick one here.
Just real quick, I think Legendary had said some weeks back that they are the de facto net buyer of treasuries right now, the stablecoin issuers like Tether and Circle.
I wouldn't be surprised. I mean, yeah, they've got a ton. And that's always the argument to say, well, that's certainly the argument that people use to say this is not a big deal, because people will say, oh, stablecoin issuers already buy treasuries, like already they buy them a ton. Therefore, it's not that much of a big deal. My position is kind of, well, I think they're going to stuff more into it. That's what I think.
Back in May, Tether had surpassed Germany when it comes to US Treasury holdings. Germany is holding 111 billion of US Treasury. Back in May, Tether was up to 111.4 billion.
Yeah, they're a country. They're a nation worth of US Treasuries at this point. So yeah, we'll talk about that more as we get into the stablecoin stuff. JP Morgan announced Kinexys launching JPMD, a USD deposit token for institutional clients on Base. I think people thought that was kind of a big deal with JP Morgan token coming. Brett, did you want to poke something?
Did you guys see the? Did you see the?
I can tell you wanted to
bickering
poke.
on the timeline. Yeah, on that one.
What was it?
This is the it's Ethereum roadmap shit. So like a lot of the Ethereum OGs have been very, very critical of first Coinbase and then now like Base for this thing, where it's like they're doing these announcements, they're having these big things, and everyone's like, say Ethereum, say Ethereum. And they're like,
I saw that.
they're like, no, dude, it's Base. It's on Base. Base is doing the Base is thriving. And they're like, no, bro, you need to pump ETH. You need to say Ethereum. Like you said Solana in your big announcement thing last week, whenever that was, where they announced like the perps and all that shit. And they're like, say Ethereum. We need you to tell everyone, tell the world it's us that's enabling this. Help us, sir.
Yeah.
There's been a couple of posts and saying, wait until they find out that Base is running on Ethereum.
Yeah.
Like no one, yeah. It's the power dynamic has shifted here, I think.
Yeah, it's a value accrual thing. Yeah, it's like and like that was a funny thing. So Eric Connor is a famous like ETH bull, and he's waned a little bit in the last few months. He's been beaten down. He did the same thing where he's like say Ethereum to like the post, like try to get them to say it, and then Kobe came back and quote tweeted Eric Connor from like a year and a half ago, where he says wait until they find out Base is Ethereum. So it's like these people that were like in the past were doing everything in their power to say like, bro, everything that connects to us is Ethereum. It's all one big happy family bubble, is like now totally flipped. They're like, no, you need to say it. Say the words. You need to say the words, even though they work so hard to make Base Ethereum.
Yeah. Yeah, it's a bit of a pickle. I think that they're in there. But yeah, bit of a power dynamic shift, I think.
And it shows like the biggest thing is like the big narrative right now is like, well, Ethereum mainnet is the thing that has like all the liquidity. It's the most decentralized. It's the most interest resistant, all this shit. So like the world is going to put all of its RWAs and all of its treasuries and all of its stable coins and all of its stuff on Ethereum mainnet. And because of that, like Ethereum mainnet and ETH token will go to infinity, because that's the place where everyone is going to want to go. But as we are seeing, right, JP Morgan is fine going to Base, bro. It's whatever, like it's cool. Franklin Templeton in the past has actually gone to Arbitrum, right? Norway issued some tokenized bonds on Arbitrum. I think it was like a year and a half ago, 2 years ago. So it's like the question becomes like everyone's like having fun, is so much fucking fun on Hype, right? Hype is 12 validators. Who gives a shit? Like let's have some fun. There's money to be made. So like this big question of like, yes, Ethereum is the best at those things. Does that matter, or is it like is it over? Did we over index on the importance of that stuff? The world is showing to be a little pretty okay with doing stuff on an L2 or on a Hyperliquid or on a Solana, whatever.
Yeah, for sure. Definitely the market is saying, yeah, people are pretty fine with it. So we'll have to keep an eye.
What does that mean? We don't know, but yeah,
we'll keep an eye. Okay, more stuff from Coinbase here. Coinbase seeks the SEC approval to offer blockchain-based stock trading. Okay, so I guess that'll be on Coinbase itself rather than Base. Although I bet if it goes on chain, that will be on Base.
Jesse teased another announcement today. He said something, another Fortune 500. I think he tweeted at like DoorDash and a few other companies, and I saw the DoorDash CEO replied, said DM me.
Okay. Interesting. Well, the BD team is working around the clock. A few other things we need to rocket through now we've got to get to the headlines. Kraken backed Ink Foundation to airdrop the Ink token. Token will debut on Aave. More details to come soon. I had a look there. Kraken's only got 7 mil TVL. Sorry, not Kraken. The Ink L2, which is by Kraken, one of the big exchanges, only got 7 mil TVL at the moment. I guess they're running no incentives, no nothing. But like, no, I think this L2, without a specific reason for it, which maybe people are struggling to see here, hard to attract the capital. Eigencloud announces Eigencloud, cloud grade power and crypto grade trust, the first true crypto cloud. That's, I think, kind of big news. Let me just run through the others first, then we'll circle back here. With Created launches the new PAWSE token on Bullpen. There's some criticism about I don't know, some weird mechanic that they set it up where if you didn't go via their platform, there was 100% selling tax. People lost all their money. I don't know what people were doing setting that up in that way. Pretty insane.
They're rebating. They're giving the money back. But like, so I don't know I don't know that this was the intention and that they're gonna like have a market. They use it as a marketing stunt, or if it just they realized they fucked up and they did it so heavily that they're gonna have to do that stuff anyways. But yes, it is all about a. It's not about Bullpen. Bullpen is Ansom's trading terminal thing. It's been around for a long time. I know the developer. It just hasn't really gained a lot of traction, even with Ansom backing it. They partnered with something with a V, Veracity or some shit, and it's a team that is trying to build out infrastructure to make the start of tokens a little more amicable for the ecosystem. Try to fuck up snipers, like actually just like try to make it better for everyone. So they deployed a technique, which is just that like if you are buying from anything outside of the actual front end that is the trading terminal of Ansom's thing, it's like this was the prototype, then you got 100% tax for like the first 20 minutes, 60% after that, 40% after that, down to like eventually 0.3% of the LP. So what happened was people who just use like aggregators or traditional trading tools or whatever, they saw it and they would set their slippage at 3, 5, whatever percent. But because it was a fee and not like a slippage fuck up, like it just straight up taxed you to zero. It's like the simulation would show that like, oh, I get my tokens, I do whatever, and then the fee was applied after the fact. So like people were posting like, hey, I swapped 10 grand into this thing, and well, you got 0% slippage on that 10 grand because you had $0 after the fee. And so like the simulation would show that you were going to get your 10 grand worth. You ended up getting $0 worth, and it all went into the pockets of the actual team. So they ended up accumulating, I think it was like $3 or $4 million worth of people trading into this shit unknowingly.
That's wild.
Yeah. And now they're going to try to rebate it. It was the token itself was launched by the WIF deployer. So like there was a lot of things to like incentivize people to go after it.
That's one of the dumb. I mean, I know we have a lot of dumb things that happen in space. That's got to be one of the dumb. One of the more dumb things I've heard recently. No.
Yes, to allow for it to be possible.
Like just objectively to decide to tax like someone. You were trying to think like, okay, why would they do it? Maybe it was this. Maybe it was a marketing stunt. Maybe it was whatever. It's like, why would you do that?
Yeah, to showcase they could do it, I guess is the best case scenario there.
Yeah, it's like trying to think of the charitable reading of it, right?
Yeah.
Okay. All right. Well, at least people are going to get their money back, hopefully. We'll
he said
keep
rebate. I don't know what that means. I don't know if it's like, oh, bro, you keep using our platform and eventually you'll get your fees back, and like we won't charge fees up to whatever the price is. Like that'd be a fucked up way to do it. But they use specifically the term rebate. Also
not a recommended, like to make up for one dumb decision. Do not do the rebate like that. That would not be the way to do it. But good distinction between refund and rebate, which I think is important. Okay, let's rock it through the rest because we want to get to the main stuff today. So all kinds of interesting, like quirky bits of news. Got another couple of Bitcoin treasury companies not announced, but as in like people raising to buy Bitcoin, DDC Enterprise and Fold Bitcoin Wallet. Also, one for 500 mil, one for 250 mil. Capital gains tax on crypto in Thailand went to 0 until 2029. That was an interesting bit of news. And I think this one's big as well. I've actually bookmarked this to read separately. I need to read more on it another day. Ubix announces a $10 million seed round to deliver global clearing system to unlock stablecoin ubiquity. Backed by Coinbase Ventures Founders Fund and Van Ack. One of my research things I always do is when I find a bunch of like really good backers, those are 3 pretty strong backers. So like I just want to figure out more about it. Stablecoin clearing and settlement network. Frankly, I have not read enough about it, but it's on my to-do list to find out more. That is that. Kind of gone around the houses quite a lot already today. It's kind of a lot of interesting things going on. Ledge, before we hit the main stuff, anything you want to just go into there? Anything? I know, Brad, maybe I'd love to. I just genuinely want to know about the Eigencloud thing from your perspective, but Legendary first. What's catching your attention?
Yep, I also want to hear about Eigencloud. I want to touch on something Brett said. Brett, you managed to unlock a new anxiety when you brought back the memories of the subprime mortgage crisis in 2007. And I was thinking, what if that will happen to stablecoin bundles when everyone is issuing their own stablecoin and someone will bundle those stablecoins and offer some like yield farming, and you have, I don't know, you have your 30% Tether, you have your 20% Apple stablecoin, 5% JP Morgan, and so on and so on. And then you have like some trashy stablecoins hidden within that mix, but you farm a nice yield. And then some of those start to depeg. I'm wondering if we could relive a stablecoin version of the subprime mortgage crisis at some point in the future.
I
I
like
mean, we
that.
thought this was going to happen with that's connected to Eigencloud. That we thought the same thing was going to happen to LRT tokens, right? It's the same thing, right? You bundle all of these underlying services to get additional yield on top of your Ethereum. So you would have ETH, which is EtherFi's version of a restaked Ethereum, which would actually be a bundle of services on the back end of it, giving you additional yield. And some of those would be more nefarious and or have slashing conditions and or like had things that could go wrong. And we predicted that would potentially be an outcome, right? You chase yield, like it's just the natural outcome of this stuff. You create competition to get more yield, right? Because you want to be the thing that's used. Therefore, you start doing things to get higher yield numbers to showcase this on the dashboard. Look, oh, our particular thing is 10% versus the 5%. Why wouldn't you use that if they're all equivalent? And then like you don't understand that the underlying there is actually a little riskier and probably not the best. And yeah, you actually just get a little out over your skis and you lose the underlying.
Yeah, I'm always super conscious of that. Like you kind of want to keep it as clean as possible, or at least be aware the further you go down, the more stuff's kind of packaged up and you don't really know what you're holding as much as you do when it's like a clean.
When you start getting to double digit percentages, then you start like, okay, there's probably something going on here.
Yeah. Having said that, I put a post out this morning on Hyperliquid right now. You can get pushing towards double digit on stablecoins at the moment, because there's just demand there at the moment. There's demand on Hyperliquid to be able to get stables. People don't want to sell their hype. They want to get stables. They want to farm all these various protocols. I've been borrowing against Bitcoin, which you can borrow against at 4%. Like it's so good. You could borrow, and what's interesting is
borrowing against 4% and then
you can
lending those stables
and lend it straight away. So like you're making money. You're unlocking money from Bitcoin.
What's the percentage difference there? Like
so
double digits to 4%. So you're looking at 10%.
It depends, and it's very volatile. The stablecoin lending rate is like very volatile, but anything between 5 and 6 to on USDT when I was looking in the morning, it was like 5 or 6 to lend it out, 4% to borrow, but then on USDE it was at 10%. So it's like if you've got
you're getting 6% on your Bitcoin.
Yeah, it's like your idle Bitcoin that is not doing anything. You can unlock some of that capital, and just what I like about it, assuming that there's no smart contract disaster, which there is always a chance of.
Yeah.
What I like about it is that it's cleaner in the sense that like I give you this, you give me that, I put it there. Like I can see what all those assets are. There's none of this underlying stuff at least. So that's one thing I just want to bring to people's attention. I like it a lot at the moment. And you're farming all the new Hyperliquid protocols, right? If Hype is super valuable, the protocols underneath it or building on top of it will be very valuable too. That's the thinking. But look, we are going all over the place today, Brad. I think Eigencloud is legit.
Yeah, I'll speed run it. Yeah. So, I mean, this is just a rebrand. So like, Eigenlayer was the vernacular that we used previously, right? Like layer is great for this ecosystem. Everything is a layer here. So that's why they went with Eigenlayer. They basically are just like rebranding to Eigencloud because it articulates what they're trying to do a little bit better, right? All of these AVSs, all of these services that exist, they're all off chain, right? They've always been off chain. It's kind of like a cloud setup, like, in the old world, right? You run your virtual server in the AWS cloud, right? It's not like actually a bare metal thing that you're running. They provide the services for you. It's very similar here with these services. It's just that the thing that they phone home to is the blockchain. So the cloud is now Eigenlayer. It's all sitting above. It's all off chain. It's all this unbound compute. You can use traditional software services, whatever for it. And then it just verifies on the chain, right? The thing that the chain's really good about is verifying the output of things, the work that is done by these things that are off chain. So it's just like trying to let people visualize this, the construction that was Eigenlayer in a more traditional setup. And that's it. Like they announced a few other services as well, but that's the gist of it.
Beautiful. I think that's super helpful explanation. I think Eigenlayer was one of the things that confused people a lot in general anyway. Yeah. So I think that simplification might be helpful for people. Appreciate the explanation. Right. Let's get into the headlines then. We have, I don't know if we're going to get to all three because there's been so many interesting things we've spoken about already, but we'll make sure we hit the main points. General macro update, Legendary. Majors are, everything's red today. conflict is maybe heating up. Also, some interesting banking changes potentially in the US. What do we need to know here?
Yeah, I'll keep the macro update a bit shorter today so that we can spend some more time on those banking changes, because I think they're really, really interesting. In terms of the macro update, so tensions between Iran and Israel have increased again, but at the same time, the fear has increased that the US will participate in that conflict. There's been a couple posts on Truth Social by Donald Trump, which have been contributing to that fear. One of which being, and I'm quoting, "We know exactly where the so-called supreme leader is hiding. He's an easy target, but is safe there. We are not going to take him out, kill, at least not for now. But we don't want missiles shot at civilians or American soldiers. Our patience is wearing thin. Thank you for your attention to this matter." Unsurprisingly, the Associated bet on Polymarket, which is US military action against Iran before July, with 12 million in volume, so quite some significant volume, is up from 10 days ago. It was at a 4.5% chance that US will have any military intervention in Iran. Now it is at 64%. It peaked at 70% yesterday. So that fear is definitely increasing and has added a lot of volatility to the market. But as we said, BTC did bounce back nicely. So the only other figure related to that I wanted to touch on are the Bitcoin spot ETF net inflows, to just see if anything structurally has changed there. And the good news here is that it's still looking good. Money is still flowing into the ETFs. We had 216 mil yesterday, 433 mil net inflows the day before, and 300 mil 3 days ago. So that is all looking still very, very solid, very green on that side of things.
I like it. Good little update there. What about this banking stuff that you find interesting?
Yep, hard pivot. And it is to do, I need to explain this a bit, with the US planning to ease the capital rule limiting bank treasury trades. So what is the idea here? It is to boost liquidity in the treasury market. The 10-year yield is still very high at 4.375%. And the proposal is to reduce the capital requirement for bank holdings to a range of 3.5 to 4.5%, down from the current 5%, which means that banks could be more involved in the treasury market. And there's a couple of things to understand and keep in mind with that. So I'm going to take 1 to 2 minutes to explain what's going on there. There's been an excellent article in the Financial Times, which I'm going to reference for that, because I found that to be extremely helpful. So I think one key thing to know is that comes from Treasury Secretary Scott Bessent, that was noted that allowing banks to buy more US debt would support the treasury market. And there's nothing inherently wrong with that idea, that the administration wants to bring down US borrowing costs, but there are some costs associated with that idea. One of which was pointed out by Stephen Blitz, being the chief US economist at TS Lombard, who has said that if the banks hold more treasuries, the banks start to look a lot more like institutions that are intermediary funds between depositors and the federal government, as opposed to between depositors and the private sector. So basically the roles or the role of the bank is changing. And why is that a risk, or why could that be a risk? There's a structural risk that basically had played out in Europe before. That was the European debt crisis 15-ish years ago, which then got labeled the doom loop. So basically, if you then see a jump in sovereign bond yields, banks will see that equity cushion grow thinner and thinner as bond prices are dropping. And then banks, as a consequence of that, need to pull back from lending. And if they have enough treasury holdings, that could cause a drag on the entire economy. And if the economy then is also in a situation where it is in a rather weak state, that can basically cause a vicious circle, because the bank can no longer buy debt from a sovereign, and that badly then needs to raise that new capital. And this is just going to spiral in this so-called doom loop. So that is the risk associated with that. The upside of that obviously would be to just inject more liquidity into the treasury market and help to bring down the 10-year yield and ultimately contribute to the goal of the US administration, which is to lower the borrowing costs against their debt.
Yeah. Okay. Super helpful. The one thing that, I mean, I think the buyers of the debt are disappearing, right? So I think that is a core issue at hand, and this is like a little bit of sleight of hand in order to try to get around that problem. The one thing that jumped out of me from when in your analysis, Legendary, was the point that you made about the banks being basically private versus the banks being basically government. And I think this is a point that's been made for quite some time now, where there are certain banks and the I don't know, what do they call it in private practice, like you know how you have a Chinese wall. Why do they call it a Chinese wall? I don't know. When you've got like a conflict within a private company, and you have to like set up a Chinese wall, and like two parts of the company can't talk to each other. But basically, there's the gap between the government and the private sector, the private banking sector, I think is dissolving. Like it's been dissolving. I don't know the history perfectly, but it feels like we're on this trajectory of it being dissolved, and historically that's usually a bad sign, right? Because especially in a free market economy, or what people would like hope to be a free market economy, especially for America, people tend to think that the free market is best. Let the private industry do stuff. You want to keep government out of stuff, and this seems to be the case that they're like increasingly involved.
Exactly. Yes, it's exactly the opposite, right? Because the historical Republican position is to push for more power and strength through the private sector. But as a consequence of that, you would actually put more of the growth generation into the government's hands.
Yes.
And that is a contradiction with like fundamental Republican values, essentially.
Of course. And that's the issue. The one extra thing that I would add, and I want to go to Funky, who's got his hand raised. I think it was on I thought this detail is pretty important. The reason why we're staying a little bit on this, because I think it's super important. So the SLR, which was the supplementary leverage ratio, this was in the 2008, they had to input this because the government, the banks had been lending out too much money. They imposed this in order to make sure that they had certain capital withheld. So the adjustment that they're looking to make, so just to clarify, the SLR required banks to hold a certain amount of capital against their total leverage exposure. But the change that is proposed is that they want to kind of exclude treasuries and central bank deposits from the SLR calculation. That's like doing that kind of sleight of hand, that slight trick would obviously make a very, very material difference to the whole setup. And it would be very deceptive in judging the bank's health if simultaneously the demand for these treasuries are disappearing and you're loading banks with the treasuries, but it doesn't come up in the SLR because you're just deciding not to show it. So that's a very convenient way to mask what is really going on. I thought that was really, really important. I want to monitor this very closely. Funky, your hand is raised. We'd love to bring you in on this. What are your thoughts, man?
Super quick. This is what Arthur Hayes has been talking about in the 3 prior essays before the stablecoin essay. He said once this SLR thing, where they like open the window somehow or reduce the number that they have to have collateral, it's Yahtzee, as he likes to say. This is just another way to print money. Print and go burr.
Yeah, I think that's the reasonable conclusion here. And I think the point that he's made often, as well as have many others, including ourselves, is that the way the inflationary measures will not be the same as before. They will not be able to talk about QE the way that they spoke about it before, because everyone knows what QE does. And so there'll have to be these other ways that they generate that liquidity, I think. So thought that was super important to bring to people's attention. I want to hit the final 2 headlines before we close. We've only got 5 minutes left. We've spoken about a lot of interesting things today. The second thing, and we probably need to do more on this, but let's try and keep it short because I want to get to Bread's headline as well, is the Genius Act. Sorry, the stablecoin bill. which has just got passed. The US Senate passed the Landmark Genius Act yesterday, advancing federal efforts to regulate stablecoins and putting pressure on the House to chart the next phase of the nation's efforts to regulate digital assets. This is from The Block. Very, very noteworthy. It's the first time the Senate has passed significant crypto legislation. So I think that is a pretty big deal. David Sachs, who I guess is very much in charge, says the crypto and AI czar had this to say. He said the US Senate has passed the Genius Act, landmark stablecoin legislation that provides regulatory clarity, enhances consumer protection, and extends US dollar dominance online. That is obviously one of their key goals here, and we've spoken at length of why that is the case. Funky, I want to come to you straight away. I know you've got a ton of stuff to say on this, but maybe for the purpose of today, where we're excessively over time already, what are the key bullet points that you want to share with us from your conversations that you've been having on the Genius Act?
Sure. Yeah, I'll be as brief as possible. So yesterday, everybody knows the Genius Act passed. I happen to be in the Blockchain Association monthly member meeting for June. They reviewed a lot of stuff. So what's going to happen next is the Stable Act, which is the House version, has to reconcile itself against the Genius Act. It's missing two provisions on conflict of interest, as well as I think AML. So they just, that the easier path is just them to reconcile against the Genius bill and then have that packaged up. There's also a lot of talk on the Clarity Act, which is the market structure bill. They're still waiting comments. However, that is going to go to the Rules Committee this week, which is the first stop before it goes to the House floor. And so once the Clarity Act gets kind of passed there, then they'll probably reconcile and look for the House, and they're going to package this up as a bundle. This will probably, their hope is to get this all to Trump's desk before the August recess, which starts on August 1st. So we're going to see some action on this probably in the next month. Also really interesting is part of the Senate just completed its budget reconciliation bill. And I bring this up because in that, there is something to do with crypto taxes. They didn't specify what, but they said there's some kind of crypto tax language that is part of the Senate's reconciliation bill that will then also go to the House. The House then has to approve it. And what the Blockchain Association is trying to do is ensure that the crypto tax language that's in the Senate version passes through the House. And so whenever this budget reconciliation passes and they move forward with all the taxes and everything else like that, hopefully there's some kind of preferential treatment. So that's as brief as I can be, B.
Appreciate it, man. That's excellent context. The one follow-up question I had for you is to do with conflicts. Remember yesterday on the show, I was talking about how I was doing some reading, and I thought in one of these bills that people are working towards at the moment, people wanted some explicit provisions in there to prevent the president and his family from benefiting from any of the new stuff happening. And when you said conflicts, that was the word that I had been reading about. Like they want explicit provisions to say that there will not be a conflict of interest. There will not be positive crypto regulation from which the president is going to directly benefit all the time. And I had read, and this is what I was looking for confirmation, that the Trump administration were pushing back on that. Is that what you mean here with conflicts? Am I making that up? Or am I off base?
No. So let me parse this out just a bit. So the conflict of interest and the AML stuff is in the Stable Act from the Senate that needs to be the Genius bill that has to be reconciled with the Stable Act. However, to your point, in the Clarity Act, which is the market structure bill, key Democrats are calling for very specific conflict of interest language within that piece of legislation that would preclude the Trump family from somehow benefiting from its foot in the industry.
There we go. Okay, that's the one. Appreciate that. That's the exact clarification I needed. Thanks, man. Appreciate you as always as political correspondent. But we've kind of coming towards the end of the show. We've got one final headline, which I think Brad can get to now. Give us what we need to know, Brad. Treasury companies, but not as we've seen them before.
Yeah, this one is another. We can't go a full day without bullish hype news. So this one is about Eyenovia, which is a company that currently focuses on, has an existing business in the eye industry. They plan to acquire 1 million hype tokens, roughly $50 million worth, to become also a top global validator of Hyperliquid and the first NASDAQ listed company to do so. So a hype strategy, if you will. The company will issue some non-voting convertible preferred stock. It's convertible to approximately $15.4 million shares at $3.25 per share, and the warrants to purchase about 30.8 million common shares at the same price. If everything's exercised, the transaction could actually generate a total like about $150 million, which is obviously a little higher than the 50 million that they intend to buy. But they are going so far as to rebrand the company name to Hyperion DeFi, and the ticker symbol will be changed to HYPE, HYPD, around June 20th after closing the offering. And also just in connection with this announcement to do all this stuff, they appointed Hyunsu Jung as the Eyenovia's chief investment officer, representing the cryptocurrency investment strategy. They honestly that's a full pivot to just being a hype company. So bullish hype. If you start seeing this stuff, it's the same thesis as Bitcoin, right? Like you start getting a race for all of these companies that are positioning to acquire a token that has a fixed supply and potentially usage, right? Or not usage, but is being used by a product that is generating a shit ton of fees. If you think that is going to continue to increase, right? They're just trying to position themselves early. You think other people will try to do this, thinking that with HIP-3 coming in, hype will eventually become the place where all of these purse trading activities take place, and maybe that extends to equities.
What I really like about this news is that typically when companies do that in the past, they try to come up with some sort of storyline that fits this narrative why they suddenly look into blockchain. But in this case, they don't even try. The summary of that press release just says, with this dual focus, Eyenovia continues to revolutionize topical eye treatment while providing its shareholders with simplified access to the Hyperliquid ecosystem, one of the fastest growing, highest revenue generating blockchains in the world. They don't even try to link
things that make total sense. Yeah. You think I care, then hype.
It's definitely been normalized at this point. Excellent summary, Brad. Excellent pronunciation as well. I enjoyed that.
I tried to look up the guy who they brought in and see if he had any kind of ties. Because the thing that's always weird for me in this stuff is who the fuck are you? Why is this random eye company doing this? Are these people that are in the trenches and we're not aware of them? So it's is it a guy who has Twitter presence? No, none of that. Couldn't find anything.
So this is the question I guess I wanted to close with. Look, we've spoken about Bitcoin treasury companies as well. I think we have expressed some concern with what is going on in the Bitcoin treasury company industry.
The tail.
Now we are, then you had the Sol treasury companies. You've got ETH's response with the one from Consensus, the gaming, I can't remember the name now, but 400 something mil buy of ETH. Now you've got hype as well. How we
risk curve, bro?
How are we feeling about this, guys? Am I seeing this wrong? This is just companies placing huge bets on liquid crypto assets. Obviously, Bitcoin is one variety of this, and I've always said Modern Market is a Bitcoin treasury company, but we're not raising money to do it. We're just, a proportion of our profits will allocate to Bitcoin. But no one else is doing that. They're just it's like they've missed the responsible phase where it's oh, maybe we should preserve some of our cash, and they've just gone straight to right, let's raise and save this company, which I think the price has been down only for years. I don't know. I feel some kind of sensors are going off.
How much due diligence do you think this company is doing?
Well, I mean, to get into hype, you have to have done that's quite a specific thing. Maybe everyone can jump on the Bitcoin bandwagon now, but to find hype and be aware of Hyperliquid, fine, is doing exceptionally well. But you need to be in the industry to pick hype. You couldn't.
Right. It's not a dart, right? It's not like XRP. It's not like Litecoin, right? That's a very specific.
So there must be some
ecosystem. Yes, but still, just it's not a proven thing. Yes, it's doing good now, but it has no Lindy, right? So for this company to eat $50 million into buying hype, I don't know how many CTs is that worth?
Exactly. I mean, this is a lot of money. Let's close this off here because we're over time already. But what's your take?
I would love to see how that process played out internally. A big difference between the BTC companies and be like, yeah, okay, I get it. Another company wants to buy some BTC because that's the cool thing to do now. But how do you get to hype? I mean, obviously I love hype, but from that company's perspective, I would love to be a part of that board meetings that have arrived to that conclusion that now we have topical eye treatments and hype exposure.
It's crazy. But is it good, bad, worrying, top signal?
It's worrying to a certain extent, I think.
It's definitely getting me like a little bit more worried. Yeah, for
Yeah.
sure. It's kind of absurd. Like literally, like we're laughing delivering the news. An eye company is buying Hyperliquid. Like that's just really
I can get a hold of him.
even more
I want to get a
ridiculous.
hold of him. I'm going to see if I can get him on the show.
Let's get him on the show. Let's
I'm
find.
not joking. I'm going to find him on LinkedIn and shoot him a blank.
All right, we need to know. We need to know why they've invested. Let's get them on the show. Okay, guys, hope you enjoyed the show. That's our show. We do it every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video, YouTube, and you can catch us on Apple and Spotify podcasts to catch up with the content. Thank you, as always, to my co-hosts, Bread and Legendary. Thanks to Funk for his political correspondent hat wearing today. And thank you, as usual, to the very instructive and helpful YouTube commenters, ex-commenters, always filling in the gaps when we say things wrong or when we just don't know what we're talking about. Thanks so much for joining us. We'll be back again with you same time tomorrow, same time, same place. Have a wonderful day. See you tomorrow.